This is London with Bitcoin Spike and VIP Trader. We're going to talk about details today in terms of our pattern trading. How do we approach day trading? Former hedge fund owner, private, non-SEC, not financial advice. My name is London. We're going to go through the details. And as part of our approach to the fourth quarter of 2022, we're going to make sure that you're ready. Guys, we want you to steamroll 2023. That's the idea. The number one trade group, I say that because we want to continue to attract the number one traders in crypto. Heavy hands, bring it. Guys, heavy cash reserves, that's our style. In terms of the pattern index, what we're looking at is Bitcoin. We trade Bitcoin. We also trade other coins. A lot of guys in the back are trading other coins, altcoins, etc. Some are trading stocks. I don't want to say options, guys. That's like taboo, right? You don't want to say options. We focus on everything from hedging to spot trading, okay? Everything from higher risk for the very, very advanced traders to the lower risk for the brand new traders. We're always focused on risk mitigation, okay? Heavy cash reserves, not being overexposed in the market. From my experience, and I would bet from your experience as well, when you see traders that throw caution to the wind, it's something we want to avoid. Absolutely, kind of a precursor. And yesterday we went through some risk mitigation techniques. We went through some risk compounding yesterday. Excited to bring you that information. We talked about, what's the use in a really favorable trade. Guys, we talked about this yesterday. Review that. But what's the use in a really favorable trade? Let's say your odds are 1,000 to 1 you're going to win. Well, if you repeat that trade at a critical level of involvement, too critical of a level of involvement, you can't even afford to continue to repeat 1,000 to 1 odds trade in your favor. So we talk about that, right? And guys, on the reverse, we could talk about, let's imagine a trader, okay? To take that out of the extreme, but at critical levels of involvement, you don't want to repeat even a really highly favorable trade. Based on my experience, guys, I've been around some really big time, heavy traders. We've traded very heavily as well, and I speak from experience. I know you guys do as well. And shout out to the VIP. Hope you guys are doing well, having a good weekend. Without a doubt, hopefully you're having a good weekend. We're here in La Jolla, California. Hope you guys are enjoying your weekend. That's the bottom line. We got to have a good time. We got to trade. Now, in terms of the pattern guide that we will go through today, we have, I would say, delays, okay? We are putting together the best website on the planet for you guys. That is what we are sticking to. It has not been an easy chore. I guess you guys could imagine that. We're gonna go through the pattern index. We'll talk about maybe some payoff ratios, some risk management protocol in terms of your payout structures. What are you looking at in terms of your own trades? The notion that if you were to talk to a pro trader and he were to say, just so you guys know, he were to say maybe, I win maybe 1 out of every 7 or 8 trades. Oh man, isn't that awful, huh? You're only winning 1 out of 7 or 8 trades. Yeah, well, what's your payoff ratio? 25 to 1. Oh, 25 to 1. Oh, so you're winning every one. Immediately it becomes interesting, right? So as we talk about risk mitigation, whether or not you're compounding your risk, what your payoff ratios are, right? We want to start talking about payoff ratios as well. We'll start discussing that a little bit more as we glide through the fourth quarter, okay? Getting into some issues like that, you may talk to a pro trader. Say, I win about 1 out of every 7 or 8. Really, what's your payoff ratio? Maybe 15, 20 to 1. Hey, not bad, right? So as we look at those issues, we'll start to get more involved into those issues, guys, those tactics, right? And I want to hear from you as well, without a doubt. Let me dig into the chats and see if you guys are around. I know it's the weekend, I know it's late, but I wanted to make sure that you guys had some streaming, right? This is VIP. We got to make sure we're bringing the heat now. And Mordecai in the house. How are you, brother? Nice to see you, Mordecai. Nice. And we got Pojalo as well. I want to say, Mordecai, this is great information. Exciting that you're here and going to be able to cover the pattern index. Now, for the VIP, pay attention. For the VIP, what you will have at your disposal, and we're going to go through this, what you'll have at your disposal, the website we're building, and I want to feature this for you so you understand it. Mordecai, loud and proud. Nice to see you, brother. Always nice to see you. Would love to see you trade. I know you're being selective with your trades. I'd love to see that, Mordecai. When VIP are slowing down, one of the things that we've done when we slow down is focusing on the larger time frames. So you've seen a lot of rapid fire from VIP in terms of trading. You guys know that. You've seen VIP trading rapid fire, bam, 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 bam. Well, VIP have taken a little bit of a step back into the hourly, into the 4 hourly. We're focusing on maybe some bigger trades, okay? So as we've started to do that, a lot of VIP are already through their 100 rounds. So they've gotten to the point where they're looking at the larger time frames. They're looking at the bigger patterns. They're looking at the heavier handed moves. We're excited about that. That's a good sign. Congratulations, guys. And we don't mind if you guys need to pepper in your 100 rounds, just have some fun, cut loose, and, you know, go for a 500% trade. Go for a 400, 300% trade. Now, in terms of the visual pattern index, I want to feature this in terms of what you'll be looking at on the website soon. Soon you'll be looking at it. Now, I can't control every element of when. I wish I could, guys. I really wish I could. But as we look at it, I want to feature it for you, and I want to show you a workaround. Until you have the website, I have uploaded, and this is just for VIP, guys. We'll have some stragglers. Fortunately, the algorithm isn't pushing us too far beyond VIP while we're building. That's a good thing, guys. We're really excited about that. We invite a few guys here and there to join our group right now, but while we're building, just so that you know, while we're building, until we have that automated infrastructure in place, we're very content with where we are. So that will accelerate in terms of our ability to process additional VIP. But right now, take a look at Twitter. I just put up on Twitter a good workaround since I discussed this with you. I told you you'll have this pattern index, and it's like, well, London said we'd have it, still don't have it. I needed to bring this to you today. I'm excited to bring it to you. Let's go through, for instance, let's find how this will work. Let me discuss it with you, and we'll use this as a future kind of training tool as we'll go through this. Let's look and see if we can find the way the pattern index will work. You'll be able to zoom in and out. I know you guys can't wait for this. It is such a beautiful tool. There we go, Mordecai. In terms of the pattern index, for instance, as you look for, let's find a symmetrical triangulation. We may call this a pennant without a doubt, but for right now, let's just hop into a symmetrical triangulation. Let's take a look at, once we click on a pattern of choice, what's going to happen. We're going to be, guys, just cold presented with the interface in terms of the probabilities, the breakout and post-breakout statistics, the percentage moving up, percentage moving down. Okay, you'll get the throwback percentage, meaning a return to prior resistance or support, or a pullback, if you would call that. And all of this information will be immediately available to you on the visual pattern index. We'll go through how to use it. On the bottom of each pattern, this is hugely important. If we were to look at this, say symmetrical triangulation, we'll go back and look at this on the pennant, which I can do right now. If you guys want to do that right now, let's just go back into the VIP website. Let's go and let's find the pennant. Let's see the pennant. Where do they have the pennant? And I know we have it. Come on. There we go. The pennant. Okay, so we go into the pennant, and we are immediately given the information for the bull pennant, which you'll see here on the left. And this is the idea, to be able to literally scope in just in tandem at any point in time, immediately on demand for you guys with the pattern index, bam, bam. So I've given you the information though in the meantime. In the meantime, I want you to have the information to be able to pull up and resource. And I'm just gonna tell you guys, you know this as a matter of fact, and welcome if anybody's joining in, but this Encyclopedia of Chart Patterns, boom, guys, get the book. If you are VIP, I know you have the book, right? We've been in talks with the publishers, etc., saying, do we need to copyright it? They have the book. All of our guys have the book, Encyclopedia of Chart Patterns. This is the book, okay? I know it's a lot to read through. It's in addition to your other books, guys, in addition to the New York Institute of Finance. Hey, John J. Murphy, Technical Analysis of the Financial Markets. The book he wrote before Technical Analysis of the Financial Markets is, and guys, that's New York Institute of Finance, where Wall Street goes to school. Yeah, guys, where Wall Street literally goes to school. Wall Street pro traders goes to school. We want you to be fully equipped. You have to compete against those guys. That's the idea. Only a VIP, you guys know that. In terms of, let's say, the pattern index here, what I've done is provide you a workaround. So until you have that immediate, just literal gunsling at the hip, ready, bam, boom, and you're gonna fire, right? As you look at your pattern index and the functionality that we'll have soon on VIP Trader. You guys know that. What we're looking at now is the ability for you all to go to my Twitter. And guys, this is a small group. This is for VIP. I wanted you guys to have this. I needed you guys to have this, okay? in terms of the ability here for you to look at our visual pattern index guide. Let me pull this over just a touch, and this is for VIP guys. I think Twitter probably has a way of knowing who's clicking on this information. So if you're not VIP and you don't own this book, I would say don't click on our specific pattern guide. I would say that. It's copyrighted. I put the copyright there. VIP, I believe, and I know many of you, I've seen your pictures, you have this book. The information from Wilder. Yes, go ahead and click on, I'm going to suggest that you not click on Twitter. Yes, it's disseminated all over the internet. Yes, it's shared from person to person to person, but I'm going to recommend on Twitter with their enterprise level of security, when I place a copyright there, guys, and it's VIP know-how, VIP information, and the pattern index will solve a lot of this once we get the website up and going. I'm just going to suggest that you not click on it if you don't own that book. Bottom line, I wouldn't download it if you don't own that book. That's just me. But in terms of that, guys, in terms of that, it is disseminated throughout the internet, and we've spoken with the publishers to that effect. They understand that it's on the internet, it's around. So we're not letting the cat out of the bag per se, but we always respect copyrights big time, because I know a lot of work went into this publication and we're big fans of it. We recommend everybody get a copy of the book, Encyclopedia of Chart Patterns by Thomas Bulkowski. Go ahead and get yours today. Now, in terms of Twitter, you will find, and if this is seen later, what I would do is I would go to, let's say, if you want to go to my profile, this is a workaround, and all you need to pay attention to this. Go to my profile here, to our profile, it's all of ours, guys, VIP. In terms of this, I would like you to click on tweets and replies. If you click on tweets and replies, that's going to show you all of the tweets that I have put out, okay? You can search under my profile, hit the search button, and you can look for, let's see what this would come up under. But this primary, oh, there we go, we got another window come up. But the primary VIP pattern index guide, if you search under my profile and look up pattern index guide, bam, you'll find the list of patterns for you to be able right now for VIP. And we may not keep this up for just ever, okay? This is a transition, I say a transition piece so that you guys have these tools and this ammunition immediately, right? Just so that you have this in lieu of the pattern index. But the exciting thing is that this pattern index is functional. Guys, it's up, it's running, it is functional. So as we look at this, yes, that the Twitter guys, I really thought, I was like, you know, it's time, we got to make some progress on this. We have been held back a little bit, to say the least, by the development team in New York. It's the Bybit development team. I was going to tell you, the original Bybit development team. They're busy. It requires a lot of input from us as well, so that you understand the process, and it requires a lot of input from us. A lot of input, guys, in terms of that. And so it's difficult to be building the headquarters, be building the website, be building the technology for the screens behind us, doing the setup of it. It's a lot of man hours that go into this. And I want to shout out to Venus. It is a pleasure to be building with you in 2022 and beyond. Wouldn't have it any other way, bottom line. So in terms of that, looking at the pennant, what you'll bring up on the pattern index is all the details. And this is VIP Trader, guys. Nice, huh? It's smooth, guys. It is smooth in terms of the zoom in, zoom out function. You'll be able to include the Lambo on your screen there on the top left, which you can see there on the top left, and your essentially your chart there to the left will have all types of different information that we will go over later. And I'll always recommend that you guys add in your own profile pic here, which is cool. You can put a Lambo, you can put whatever you like to do. You guys, if it's just you, we have a lot of your pictures up there right now. I need high resolution pictures of you as well. In terms of the result snapshot, you'll see for the pennant. Now, this is the great thing, just a side-by-side analytic. As you're going to look at this, the important part is like, yes, these are exactly the same pattern. Yeah, we got a match. That's what we want to be looking at. And Bulkowski has gone through 150,000 plus guys, 150,000 plus patterns to bring us the probabilities associated therewith. I mean, you may find, and you need to think about this, you may find, there's Chris in the house, my man. Chris, we like that dog. What's up? We like that dog, without a doubt. That's a good member of the family. In terms of, and Chris is VIP, Mordecai's VIP, these are our VIP guys. Now, in terms of the pattern index. You know, if you were to find, you need to pay attention to this, please. If you were to find a specific chart, right, and it looked like another chart that were in development, or let's say you found even a stock chart that looked like your chart that you're trading right now, you would hold that up and be like, and be very interested. Yeah, you would want to know. It's like, what did this chart do? Because this looks just like it's the same thing. Now imagine going through Bulkowski going through 150,000 patterns, guys. 150,000 patterns of charts that look just alike. There's a reasonable level of reliance on this information based upon our use of it thus far. The probabilities on 150,000 decades worth of patterning in the markets. It's not just one chart that we find that looks kind of like our specific chart right now, guys. 150,000. In terms of empirical data, in terms of market data, it's the largest study that's been done that we are aware of, guys, that's been published, that is available to traders. So we're excited to bring that to you in the form of the pattern index and daily, guys, in terms of the tweet, etc. I want you guys to go through and download those. It's not in the format yet that we want it in, which is you all having that gunsling by the hip, wham, bam. Because many times, I'll tell you, you can surround yourself with all of the answers. It's the ability to access the information. You guys know that you have to be able to pull the trigger quickly when you need to pull the trigger quickly. Some patterns are slow and methodical. Other patterns are very quick, let's say on the 5-minute, 3-minute time frame, and you have 2 to 3 patterns that you need to go 2 to 3 wide immediately and digest the information or compare the probabilities. So in terms of the book, make sure you've got the book first and foremost. Also, New York Institute of Finance, John J. Murphy, technical analysis of the financial markets, right? You need to make sure you have that book. So looking at this, let's go through the details. You guys want to look at how we use these specific snapshots. If you would prefer to do that at a later date, we can. Why don't we just make this kind of an urgent stream update where you guys need to download this information? Then when I've made sure, let's do this. Then when I've made sure that the VIP have downloaded this information while we're looking forward to the transition, and guys, it's a nice looking pattern. The pennant is a nice looking pattern. You guys agree, huh? It's a bull pennant, so we have picked up on it. That's exciting. That's nice to see, and picked up a little bit early, okay? We also have a bell. We like to rock those expansions, those bells, without a doubt. The expansion is a great pattern, guys, to look at as we would look into the patterns to either discuss or not discuss. I know Doge went through a nice fan reversal just a minute ago. That was nice to see, guys. Good price action. Let's go back in the pattern index. Let's look at one of the reasons we focus on, for instance, this bell formation. Let's look at this on the left-hand side. Let me clean the chart up so you can get a good, clean image of it. There we go. We'll take our indicator off for just a moment, which is traded very, very well. I know a lot of you are looking for those larger time frame hits. Without a doubt, it takes some patience, but there's no reason why you cannot trade at lower time frames, especially if you've already practiced and built up your ability and your skill set to trade at the lower time frames. Don't leave the money on the table, guys, or the experience. You've been conditioned. You guys have proven yourselves to be extremely capable at the lower time frame. So don't just don't forget it, guys. Don't leave it out of the mix. It's why we're in trading, guys. You know that. It's why we're here. We like that fast-paced price action, that aggressive price action. Those smaller moves sometimes just it's part of the experience of trading. So anytime we see grinding like this to the upside, just to show you guys, anytime we see that grinding to the upside, what is that telling me? That is telling me that we have some sort of a fan dynamic going on, just so that you know, as we would look at this before we get back into the pattern dynamics, okay? Before we get back into that visual pattern guide, anytime, and pay attention to it, guys, this is a good little trick of the trade here. Anytime that you see, let me see if I can get where's the brush? Anytime that you start to see something like this continually just carving and carving and carving, it's like, why is this just carving to the upside? It doesn't even look natural, does it? As you would look at it. Well, buyers are turning levels of support into, or resistance. They're conquering the resistance and flipping it into a level of support. As you would look at this on your smaller time frames, you'll normally be able to identify levels of a fan. Here we go, guys. In this specific pattern, I'm glad I'm bringing this up right now because this specific pattern is in John J. Murphy, is in the New York Institute of Finance. So that'll be something that I've incorporated via an infographic, which you guys can refer to. But anytime you really see this specific carving like that to the upside, and you may find that you're going from one seat on the fan. The seat is that array component. I mean, this stuff's not complicated, right? It's as simple as you can get it. I'm going to tell you that to understand it and be able to function with it, it's not supposed to be simple, I'll tell you that. But as you would talk about one seat, just that centralized pivot from which the fan dynamics, you guys all heard of GAN fans, you've heard of flipping a resistance to a support. That dynamic a few days ago, we did that great video on that where we actually replayed the sequence, the bar replay. They call that the bar replay function. So looking at that, when you see price carving like that to the upside, I want you to be aware of the fact that it may be that the buyers are engaging in levels of the fan. Pay attention to that. Now also, when you reach a specific level on a fan, pay attention to this, then we'll go through this. Let's go ahead and open up the broadening wedge. The wedge, we call this, guys, we call these bells. We rock them to the upside. You guys know in VIP, we rock the bells to the upside. This specific pattern is a VIP favorite. It will continue to be a VIP favorite without a doubt. And you guys are just seeing the visual pattern index is going to be really nice, isn't it? Just the ability to scope into laser focus and at the just immediately pull up what needs to be pulled up so that you can reference the exact percentages. Now, I'm gonna make sure that you guys know how to do this. I'm gonna right click because right now on Bitcoin, I have $16,650.00. I'm gonna right click, I'm gonna go to settings, right? I'm gonna right click and go to settings, and then I'm going to go to the top chart setting there, and from default, I'm gonna click 1-to-1, okay? I'm gonna click 1-to-1. If you look under chart settings, I'm gonna go from default, I don't want default, I wanna click 1-to-1. 1-to-1 is gonna eliminate all the decimals on the right-hand side of my screen. If you ever get trapped in that, it's like, well, I have too many decimals or not enough decimals, go under chart settings and that precision, it's under precision. Just so you guys know, make sure you make a note of that. You can right click on your screen at any point in time and go to settings, okay? So as we look at the specific pattern formation, let's go into the 5-minute. Let's just kind of walk through, and it's nice to see that grinding to the upside. You know, buyers are continuing to break levels of resistance and flip them into support, that fan dynamic. Not every broadening wedge or bell, also very closely associated with a bump and run reversal. We'll go through that as well, guys. Shout out to the VIP. It's not a VIP weekend. What's up, guys? So as you would look at this, I want you to pay attention on any fan. Once you get to a critical level where you start to achieve a 90-degree angle, pay attention. Where you start to achieve a 90-degree angle, okay? I want you guys to pay attention to that next level up, okay? Because as we decide, I would say as buyers and sellers, as we decide to participate on a long or a short, what needs to occur is the following. A very bullish structure is a descending broadening wedge, okay? And I'm gonna draw this out very quickly for you guys so that you understand the dynamics in play with any fan. As you start from the lower levels, Venus in the house. Venus, what's up, Venus? Nice to see you. Boom. Venus is in the house. Nice to see you. I have to say, nice to see you. Excellent. Guys, Venus and I are building. We are excited about it. It is not easy. Hey, we went ahead and said it. It is not easy. It's a lot of work for you guys. We're excited about it, though. We would never, guys, we wouldn't have it any other way. We're excited about that. Venus, it's great to see you. And guys, what's not easy is we need to build, and it's like, we still need to trade. You guys know that. So it's like, we could probably just build or just trade, but it's like we have to build. We get to build and we get to trade. We'll never forget the experience, without a doubt. As you look at this, I want to engage you guys with the broadening wedge descending, a very bullish. How bullish, guys? Take a look at this, the result snapshot. And again, guys, this is incoming. This is VIP know-how. Nobody's gonna, guys, have the arsenal that you guys have. Nobody. And VIP trader, you're gonna be like, whoa, okay, this is nice. You're gonna like it. In terms of the 72% to the upside, do you see the breakout direction here? The probabilities are 72% to the upside. 72% to the upside. Now you have to trade them. You have to know when should you expect a bust, right? Look at this 72% breakout to the upside here, boom, with an expansion. If you don't trade these enough, you're gonna get caught up, you're gonna lose money. You can have a 70% probability of going in a certain direction and you can still lose money. You can have a poor entry, you need to work on these. I tell anyone I care about, I'll tell you, and I promise this is the truth. I tell anyone I care about, financially or otherwise, that I want to do well, I'm gonna tell you, go trade 500 of these. I know it seems like go trade 500 of them, but anyone that I really care about, I tell them, go trade 500 of these patterns. Because you're not gonna find another pattern that has a 72% probability of a breakout to the upside. Now, once you trade them enough, you will also start to see where they like to fail, boom, where they like to throw back, bam. Or the ones that want to just scream to the upside and go 2 to 3 or 4 times, let's say 2 to 3 times the height of the whole pattern. Boom, rocket ship time, right? So I tell that to people, and it may seem like a scapegoat when I say you need to, as this one is just about pushing up along this line of resistance on the 5 minutes. Yes, we're dealing with a pattern with 72% probability of going up. Yeah, 72%, guys, that's more than, that's more than a bull flag. It's more than a bull pennant. That's strong. That's the number one, guys. That's number one in the market, okay? So even with that said, you need to understand where the pitfalls are. Where does it get catchy and grabby? Over, you guys know this, over the line of resistance. I always caution traders, do not, I'm just gonna tell you, you do it if you want to. You tell me how it works out, but I caution traders, I'm like, don't trade here. Don't do a breakout trade. When you're doing any breakout trade, I always caution the traders the following, that who has a better position than you? Everybody who decided to participate in this zone lower, right? So when you're buying higher at a point of breakout, and I will say this, depending upon the pattern, New York Institute of Finance will suggest that potentially you want to add to your position. Potentially this would be an opportunity to add to your position. I like you guys to grab it lower. We have incredible tools. If you're interested in trading a specific pattern, yeah, our Fire and Ice will give you an opportunity to participate. Guys, I can almost promise that. You guys know, you know the indicator. You can almost promise it yourself. Yeah, Fire and Ice will give you an opportunity to participate at a lower level, depending on your time frame. Depending upon the time frame, that can be a promise. Literally, you guys know, if there is any further, I'd say preceding lower side price action on a lower time frame, you would have had an opportunity to at least participate on the pro level. You guys get that? So, and I could steer you away from lower time frames or from also the pro level. So that would be the qualification there as you look at really what we're developing with our indicator, with our trade group, etc. So getting into the pattern, let's say the pattern dynamics, the 72% probability to the upside, that's good know-how, guys. That's good market intel with 150,000 patterns looked at, and this one goes 72% of the time. Can you imagine looking at the thousands and thousands of these patterns and saying 72% of these go to the upside? Bam. Yeah, we need to focus on these patterns. That's going to be the conclusion if you're looking to make money and you're looking for those probabilities to fuse in terms of your participation in the market and your profits, right? That's what we want to focus on. You may be, I'd say you may be very well situated into your Fire and Ice, our indicator, into the specific time frame that you have designed kind of your trade approach to. You may like to get right underneath the maybe a small entry underneath the green buy line, and you may like to really hit down just below and get some additional value below the fire sale line. You may like to ladder in and scale in, right? Ability to double or triple down from the green buy line to the fire sale line, and never so intensely, guys, critically involved. We covered this yesterday, and I'm going through the pattern visual index today for a reason, guys. It's just we've had a little delay on, it's just a function of moving. We are actually moving to another headquarters tomorrow, so we're making another transition there. I'm like, before we get involved in that move, before we are pushing back anything with the website, I've told you about the visual pattern index, and Yeah, I'm going to tell you, it ain't having the gun, it's the way that you shoot at the target range. Boom. I'm going to tell you guys that too as well. It ain't about having the gun, it's about whether or not you can shoot it. I'm going to tell you that. So in terms of this information, we're going to be making sure in the back that you are fully equipped at the right time with the right ammunition, and bam, you got the right targets. That's what our goal is all the time in terms of identifying these patterns. I'm going to tell you guys, you can look at, you can have all the information in the world. You can have the 1,000+ page book. If you don't know how to identify the patterns, this information can be useless. You guys know that. So that's the key function here. And I just want to make sure that you guys have it. So looking at the framework, yes, you need to know how to trade these. Involvement at the lower levels in them is always required if you're going long, guys. It just is if you want to be successful. And it's just it's because someone else is going to beat you from a lower level. Let's say if you want to beat the competition, let's say that, because someone at a lower level is going to beat you in their lower entry. Just a matter of fact, once you saw this carving up on Bitcoin of this fan dynamic, and Doge had a beautiful one as well. This is the type of pattern involvement where it can justify any fan is nice for the following reason. And pay attention, this is that fan dynamic we're seeing with those white lines that just fan out like this, where the resistance turned into support, resistance turned into support. When you start to see these dynamics, I'll just tell you, particularly if you can find one carving to the upside like this, it can really justify a position with a level of support expectation, right? You need to be careful of any fan which is dropping off as it goes up another level, right? If you just want to solidify into a long, pay attention, this long is actually building up along a trend line as well. So this is a nice fan to participate in, and there are multiple types of fans. Guys, some fans will want to gradually go down, as well as they're working their way up, rounding around, let's say, the element to the upside. Okay, so this would be one where there's an actual nice trend line, okay, that's reinforcing each level of resistance turned to support. These are nice to be a part of. You're locking in, along with this dynamic, you're locking in a position, you're able to lock in along as these carve to the upside. So pay attention. This specific fan we've seen multiple times on Bitcoin. It's distinguishable from the other fans wherein each level wants to pour down a little bit. Those become a bit trickier, right? Fire and ice becomes, our indicator becomes very useful in those other instances. But as we would look at, again, pay attention to any time that you start to see this type of price action, because no one else in the market, guys, no one else in retail is going to know what that is. What is that? Okay, and I'm telling you, you guys know this. That is literally a fan dynamic from a specific pivot wherein the traders are continually breaking through a line of resistance to establish that and confirm that as a level of support, and it's a continual process. You want to watch out on these. Pay attention, guys. You want to watch out when we start to go from a parallel, guys, a 90-degree angle here, boom, when we start to head up, okay, when we start to take from the pivot area to the upside, pay attention, you guys are learning something here. If you don't know this already, many of you do, but when we start to establish any type of upward activity, instead of bringing the fan in from the downside, when we start to project towards the upside, fans traditionally become unstable. I just say traditionally. You need to at least be aware of that level of instability. And where does that come from? Essentially, the fans are progressive levels of broadening wedge descending, or a progressive level. We call them bells because we like to rock them to the upside. If I put a GIF next to this one, you guys will see that. In VIP, you have those infographics, that information, right? And it's a shared componentry. This broadening wedge descending is a shared componentry. Let's go through it. Let's talk about it. It's a shared componentry with let's look at it, with the bump and run reversal. Take a look at this. The bump and run reversal also has, it's very important, guys, very important to realize this. Bump and run has that descending level of resistance and that descending and broadening level of support. So you can really bootstrap in the broadening wedge with the with the bump and run reversal. That's why I grouped them together. We just call them bells. We rock the bells, right? They have that broadening bell shape formation, but you see that overlap. That's why you just see the similarity there, guys. So that's why it lacks the trend line on the bottom. Also, this is a lead in, okay? This here on the bump and run, so that you know, this is the lead in formation, okay? And there is a preference, a lead in a 1-to-2 ratio, typically, right? It's avoided sometimes or dismissed sometimes, but that lead in to the, let me see, Venus saying 1 hour pro level was a great entry. Thank you, London. Hey, what's up, Venus? Hey, way to go. So excited when you trade. For everybody, guys. I am so excited when you all trade. Venus saying that the indicator on the pro level, on the hourly, was a great entry today. Boom. Nice to see you trading fire and ice. We wouldn't have it any other way. If we could design something without going into a quantum computer, listen to me, guys, if I could design something without getting into a quantum computer, and I'm not kidding, literally processing the information for Bitcoin through a quantum computer, if I could design anything better right now, I would, but it would involve me at this point. I'm literally at the point to literally launch Python code into a D-Wave quantum computer. Guys, that requires a big step into quantum computing. Not that we can't go there, but that's a lot, guys. If you know anything about quantum computing, it's a lot. So that's literally where we're at in terms of the level of proficiency that our indicator brings to you. And it's fully contemplated to potentially do that with the quantum computer, okay? But there is an access issue for the VIP, and bringing in, if it were to be computed on a quantum, guys, quantum computers are big deals, okay? They're bam, like defense military grade, like, you know, they're big time stuff, guys. It's not like we have a laptop. Oh, well, it may also be a quantum computer. Maybe this laptop is a quantum computer. No, guys, this laptop is not a quantum computer. This is one of the best laptops you can get, okay? But it's not a quantum computer. Okay, a quantum computer is going to be like the, it's the powerhouse. I mean, it can, I don't want to discuss all the applications of it, but it's a big time deal, guys. So as we look at this, understand, there's a possibility as you look at fire and ice, you may say, well, it works, maybe it doesn't work as much as I want to. I'll just tell you the bottom line. I can make it work a little bit better, but it's going to require you to have access, at least you to have access, okay, or me, or whoever's trading at Venus, etc. But it would require you to have access to the results of the quantum computing. So there are access costs to a quantum computer, okay? There are costs to compute with the quantum computer. As we look at the distribution and the specifics involved with the indicator right now, we're at a limitation mode with what TradingView can do, right? Our kernel estimation, our kernel regression on here, we have multiple types of regression to apply to this. You guys think, well, it's just a must be a common indicator. No, guys, we've got every kernel regression literally tied into this to throw at this with, and guys, it's not a foreign in terms of statistics. This is the type of information that you would probably find with a, maybe some, let's say some, we've had some backdoor discussions off the record, guys, with like Goldman Sachs and some different people that use this type of modeling. Okay, so it's very much in the forefront. They'll get into some virtual machinings or machine learning, right? They'll get into some sophisticated processes. This is more information than what you want to know, but for VIP, now you know, okay? So the quantum impact of what we're able to achieve outside of TradingView would be beautiful. But we have access costs associated therewith. Thereafter, we have to bring in somehow the information to you if we're going to literally generate the indications on a quantum computer. We have to somehow facilitate that in terms of your ability to see it. It's not going to be on TradingView. It's just not. So that's as you look at what we're building, that's one of the that's one of the side levels of progress that literally is on the map that we could get to, but you understand when I say it's 2022, we are building. That's the framework that we get to. Like, we'll push something to a maximum in terms of the indicator, and you may think, well, it worked here, it didn't work there. We can make it work here and there. and everywhere. We just literally are at the point, if we do that, it's going to be on a quantum computer. So I bring that to you guys. You can check out D-Wave. D-Wave is super cool, guys. Super cool quantum computing stuff. A lot of VIP are heavy into technology, and that's the right kind of team that you need. I'm gonna tell you guys, if you have any other ideas in terms of, if you guys want to work on that with us, you let us know in terms of quantum computing. A lot of you have a background, so that's nice. What I was talking about in terms of that, and that's a commentary for you, Venus. Congratulations. Sophie is watching the stream and says, my name and picture will be up there with the VIP soon. Shout out to Sophie. Sophie, hats off. You are the quintessential of what VIP needs to be, and I'm excited to be able to say, guys, that Venus is with her daughter, Sophie, and Sophie is brilliant. She is an excellent future addition to VIP, and we would welcome you to join anytime. I'm glad that we went through the quantum computing a little bit, because that's really, and Goldman Sachs, nice for you to hear, Goldman Sachs, an investment bank management, asset management company. I'm really excited to interact with you, Sophie, and anyone else who's learning the game, learning to trade, learning the essentials of an indicator, a pattern index guide. Sophie, you're gonna love the pattern index guide. Imagine, guys, she is in high school and she's there with Venus. Can you imagine having access to this information at a high school level? I did. Okay, I did. I carried around literally the New York Institute of Finance book into my classes. Sophie, please don't do that. But I would do my homework ahead of time so that I could focus on TA. And how could you not be inspired with Venus right there at the house? You guys know that. How could you not be inspired? Venus loves to trade. She's really a good trader. You guys know that. So, yeah, Sophie, we're at the point where literally we would need machine learning. Let's say virtual machine, let's say machine learning or quantum computing, which, quantum computing, they will run, space systems with. They'll run quantum computing, they'll run maybe entire missile defense, like a missile defense style programming for a country would be run off quantum computing. So when we look at like a regular computer and I hold up the laptop, we're at the point on our indicator, which generates buy and sell signals, but we're at the point, we're way beyond something like a laptop like this. We're into, machines that fill at least corner offices, if not offices, if not floors of potential buildings. And so that's exciting. So back to the basics as we would look at the shared componentry between bump and run reversal. And shout out, guys, VIP weekend is a good thing. As we look at the bump and run reversal, okay, and we look at that, it's descending. That resistance is what, guys? The resistance is what price cannot get up and over, okay? And that's, we know that because we're able to establish and draw a trend line at some point over what price can't get up and over. There's a resistant trend line there that price will hit and bam, move to the downside. Looking at that resistance, you can see in here a level of support that we could draw as well with an expansion, right? Expanding between resistance and support. And what is that, guys? That's indicative of an expanding level of volatility. What is volatility? Well, if price is standing still, let's say literally you have if price is literally standing still, there's no volatility. Okay, volatility is the degree to which price will fluctuate instead of being at a spot pegged price. Okay, so when you would say there's a lot of volatility in Bitcoin, what they're saying, or a crypto or anything really these days, there's a lot of volatility in the markets overall. We're saying that price is not stagnant. It is not fixed. It is moving up and down. There's a lot of fluctuation. There's volatility in the market, meaning there's a lot of fluctuation in the price. We like volatility. It allows us to trade, without a doubt. It allows us to trade. We need the volatility to be able to trade. Too much chaotic volatility can be difficult to trade. But as long as you have a liquid market, and by liquidity or a liquid market, as long as you have a sufficient number of people there trading, okay, at all of the levels of the volatility, the price level may be going dramatically up and dramatically down. But as long as you have participants, liquidity, if it's a liquid market, that's a great term, a liquid market. Is it liquid or not? Just think, A liquid market means there are participants at all the levels of volatility. And that's what we want. We want a liquid, highly volatile market. We really do. That's our preference as we look at it. So if you guys can imagine a high schooler like Sophie walking around and saying, well, I'm excited. We think we've identified a really highly liquid, highly volatile market to trade on in the first quarter of 2023. Oh, why doesn't she just say that to her business professor or someone? That'll get you the job, Sophie. When you get to that point, don't you guys think, if she's interested in investment banking or otherwise? You know, I had a great day. I'm very excited. I think I've identified a highly liquid, highly volatile market that I can take advantage of in the first quarter of 2023. Well, can't you guys just see, huh? And that's a good thing, huh? So yes, liquidity, right? It's a highly liquid market. There are people willing to trade at every possible price it can go to. It's really, really liquid, as opposed to like a market that's not really liquid, right? There are no buyers or sellers in the market. It's just like there's no one there at certain prices. It's just crickets chirping. There's no one there, right? It goes to a certain level and there's just no one to participate in the market. Literally, it's just void of any ability to actually trade in it. That would be an illiquid market. Something that's completely not liquid. We can't trade it. We will refuse to be a part of that specific market. So Bitcoin is very liquid. There are people all over the world that are willing to trade at all different levels of the volatility. Beautiful thing. It's a beautiful thing. So in terms of that, those are the requirements, okay? So for us, volatility, because we want that price action to move. Very important point tonight, guys, for all the VIP. I know you know this, but that's why we focus on Bitcoin. I know the altcoins, Dogecoin or Matic or whatever the additional coins may be, a Litecoin or whatever, you may be fancied upon or fashioned upon. The problem with those is the level of liquidity. How many buyers and sellers are there actually at, let's say if there's a big trajectory to the upside, let's say something really escalates in price, something goes from $1 to $200 just very quickly. How liquid is the market? Okay, that's what we look at with Bitcoin, because it manages it and it has a lot of liquidity, a lot of participants willing to trade within the scope of its volatility. Whereas on some of the other altcoins, let's say a Dogecoin or something, even Doge, yes guys, which is relatively liquid, a relatively large amount of participants, okay, willing to trade at the different prices which it may fluctuate to, okay? But that's very important for us with Bitcoin, because we have a lot of confidence in the liquidity, meaning the participants, the number of participants in the market. These are big terms, but you guys understand. We need a liquid market and we need volatility, and Bitcoin is the liquid, high volatility market that we're looking for. So in terms of this, just to kind of follow, let's reframe into downward sloping expansion, right? A downward sloping expansion. I'll normally hold my fingers like this. This is bullish. You guys see on your screen. You see that? Okay, the downward sloping expansion. And I mean price in between something like this. And I'll do this in person to people and they look at me like, what are you doing? I'm doing this here. This level of support, level of resistance, this broadening wedge descending is what, guys? A 72% chance of breaking to the upside. 72% chance is very high. So that you know, you'll find many much lower. Now, within this, a probability sheet, you'll also find the pattern top as target. As you look at the targets to the upside, you have an 83% chance of reaching the pattern top. Very, very high percentage. So what we want to always do is participate in those trades with the highest level of probability. And yesterday I talked about what's the worst idea. If you have let's say you have 1,000 to 1 odds in your favor. You have a trade and you're 1,000 to 1 odds you're going to win. The worst thing you can do, one of the worst things you can do, and I see people do this with highly, highly probable trades, they're going to involve themselves at a critical level in terms of how much money they're going to put into it. And it could be catastrophic if they were to lose, but they're so confident. Think of this, they're so confident. Say trader has a 1,000 to 1, and let this sink in, 1,000 to 1 probability of winning, the trader becomes emboldened. The trader starts to think, well, this is the time to really go critically large on this dynamic, wonderful opportunity. But then the trader will become critically involved, the trader will win, and the trader will continue to trade at a critical level. And as the specific trade is repeated, the odds start to not favor the trader. Now, the 1,000 to 1 is an extreme example. That's a very high probability, right? But it's still, even at 1,000 to 1, I've seen people continue to take swipes at the 1,000 to 1 at critical levels. And I mean critical levels that are, when I say critical, I mean that could really damage the trader financially. So they'll see the 1,000 to 1 odd, and they'll over involve themselves, both in terms of the number of trades that they'll take at that level of odds, and in terms of the level of exposure, how much money they're putting into it, that critical level. It's like, so that's the last thing you really want to do, is test the probabilities to the point where they start to not favor you. You're putting critical amounts of capital, money, into a trade, and you're just chipping away at the probabilities. No, you're just asking for that one. What becomes inevitable, and this is a great way to look at this, what becomes inevitable as you look at probabilities, and pay attention, guys, as you look at probabilities, if you're looking at, well, the odds are 1,000 to 1 in my favor, okay? It's fine if you have a good risk management protocol, no problem, beautiful. Trade that well with the proper amount of risk. What becomes inevitable, though, if you have 1,000 to 1, what becomes inevitable is the 1, okay, out of 1,000. And there are traders, understand this, because I talk a lot with VIP about this, and you guys, you know this to be true, but what starts to happen is, if you're looking at 1,000 to 1 probability, okay, 1,000 to 1 probability, and we're not talking gambling, we're talking trading, okay? We're not talking a roulette wheel or nothing dealing with a poker or gambling at all. We're talking about trading, 1,000 to 1 probability in your favor. What becomes inevitable is the 1 occurring. And there are traders who will look for the payoff and capitalize on the trade for the 1, okay? Yes, most people will think, oh, I want to trade this 990 times out of the 1,000. There's another group of traders out there that will say, well, I just need to hit my 1, okay? So as you're looking at this, when you start to think that you can never be beat, let's say you when you are so, let's say, overly confident due to your probabilities, understand there's another group that has already unwound your whole level of confidence, and it's just looking for that 1 hit to take you out on the 1,000 on the 1,000 trades. Okay, so always keep in mind, keep a balance, even if you're overwhelmingly confident due to your probabilities we talk about. And the 1,000 to 1 is a push; it's out there, and a great probabilities as long as you're not overly critically exposed. But it can still not be enough. It's not a guarantee. It's not a lock. So always mind your level of exposure. Right? Always know there's that person that just wants that 1. All right, they just want to take it once from you. If you're putting it all in, if you're going all in, even on 1,000 to 1, they just need 1 out of 1,000. That's it, guys. So pay attention, risk mitigation, right? Lowering your risk, never compounding it, guys. So broadening wedge descending, this is the pattern index guide, looking at the framework here on the left. And I'll clean this up one more time so we can get a good look at this. And shout out to the VIP. Hope you guys are doing well. And yes, anyone who's looking to join, we're excited about that, particularly Sophie. It's gonna be awesome. Can't wait, cannot wait. Now, in terms of the formation here, you're going to see, and we'll go through the tools, we'll go through all the information in terms of how to draw these patterns. Absolutely. But looking at the expansion here on the left, you see it mirrored here on the right. This is a phenomenally positive pattern. 72% is very high. We went through that as well. I'm going to reinforce that this specific portion down at the bottom here, and I trust that you all heard. I can't wait. We're excited about that. I'm going to put VIP for Sophie at the bottom here. Let me do this and shout out to her very quickly. Let me put VIP Sophia. If I can type it. Well, it won't let me type properly. Of course, it won't let me do that properly. But as we look at the, let me say this: the reason for the stream tonight was the following. I wanted to get into the pattern index. I want to get into the second part of this discussion, which is going to be targeting the percentage that you're expecting to move on this specific target here, or on this specific pattern here, this broadening descending wedge. What are the maximum, okay, and you're gonna strategize around these patterns, okay? You're gonna strategize into your entries, okay, into a potential kind of carry position. You're gonna be asked along the way on a positive pattern, do you want your profits? I just tell you, if you get a good entry and you're in the money, you're in the profits, the question will become, do you want the money? All right, do you want the money or you want to risk it, okay? And as we strategize through the patterns, it's going to be critical. The most critical question is, when should I take my profits? Okay, yes, if you've answered, when should you enter? When should your entry be here? You're going to next deal with the question of, when should I take my profits? It's one of the more difficult questions for traders. VIP all the time have the question, when should I take the profits? It's a great problem to have, okay? And it can be a problem. And you'll find in the market, the more aggressive that you are, you guys know this, the more aggressive that you are in terms of saying, no, I want more profits, well, you'll probably have fewer opportunities to really, or say you'll actually capitalize on fewer opportunities to really take it. When a trader is overly aggressive on taking profits, overly quick to say, well, I want my profits, I want my profits, I want my profits, the level of certainty goes up, but the overall profit equation could go down. They may miss the huge move, right? Whereas the trader will balance that. The trader who says, no, I want more profits, he'll catch the big move, but he'll miss all of the consistency along the way. So that's a constant, there's a constant balancing act that needs to occur there. And the New York Institute of Finance goes through a great dialogue on that in terms of making sure you're balanced between if your percentage gains are not large enough, you need to develop some tolerance and allow some of these to play out. At least maybe learn to trade them a little better so your percentage gain is a little more reasonable. Now, trading on leverage, is an opportunity for you to capture a larger percentage gain on a smaller move. You know that. So, but this is not required. We also have spot traders. Shout out to Chris Aussie. What's up, my man? Former military in the house. Excited about that, brother. It's good to have you. So looking at this dynamic, I'm going to go through, we'll probably do this tomorrow, guys. Let's go through the targets tomorrow. Let's go through that. I wanted to make sure that you understood that we are working on our, guys, on the website. It is a project and a half in terms of bringing you the tools that I'm just going to say the ammunition for you to be able to participate on the fly. Boom. Just picking your pattern out and deciding exactly what you need at that exact moment. If we're to say, okay, I want to look at a triangulation right now. Bam. Looking at bringing up the triangulation, matching up the left to the right, whatever your pattern may be, we're really excited about bringing you that, but we have been a little delayed. And guys, part of it is just the function of the amount of work that has been involved in building in 2022. We've been telling you we're doing it. We promise we're doing it. You guys know that. But as we look at this, I want to make sure that you all are aware that I have uploaded this information for your use now, for your download ability now. So Sophie, you can go to Twitter now and you can download all of this information. Kind of a pre-VIP welcome package for Sophie and anyone else who wants access to it. It's very important. And Sophie, I know that you also have the book, the Encyclopedia of Chart Patterns. A must if you're going to download it. In terms of the additional information, let me go through and we will look at additional information that was released for VIP. But do understand that the by the hip, guys, it's not just having the equipment; it's the ability to use it very quickly, right? You have to be able to deploy the skills very quickly and deploy the information. That's where our pattern index guide on VIPtrader.com. That's where that is going to come into play without a doubt. And I will update you guys. In terms of the additional tweet that I sent out tonight, This is VIP, guys. We really spend time building this group because it's a really tight group. It's a great group. There's no other group I would prefer to be a part of. If there were a better group, I would go join it, guys. You know that, huh? If there were a better group, I'd go join it. There's not. So that's a good thing, guys. That's a very good thing. I know you guys are saying the same thing, but it's cool. It's a nice dynamic. In terms of the additional tweet that I did send out, and I didn't want to clutter up the back DM VIP for you. I didn't want to clutter that up, guys, in terms of we have charts. It's very nice to have those charts. But I sent out another tweet here as well, Sophie. You can look at this as well as any additional new VIPs incoming. And it's for our VIP infographics. Now the infographics is another tweet that, and let me pull this over so you guys can definitely see this. But the infographic is something that you'll be able to pull up and see the books that we use. Hey guys, you'll be able to, and follow the thread. You'll click on the tweet, then you'll be able to follow the thread, and you'll see the books that we use. You'll see the rules that we have, right? We've gone through all the rules. Respect is the number one thing, professionalism and respect. And we have families that are that have kids, and so this happened last year with Dogecoin, and it was Luke. Shout out to Luke, I think in Canada. And I was sitting there typing on something, and I think Luke's daughter jumped on the keyboard, and we were chatting back and forth. I was like, "What are you doing? Where's your chaperone? You need to get Luke over here right now." And before she started telling me she wants a Lamborghini, I don't know how old she is, but Luke's daughter wants a Lamborghini. That's what she had to jump on the computer and tell me. That was last year. But we've been very aware that we have a family dynamic. We have some tough guys. So we have some, both in terms of business and just tough guys. We got a lot of former military in and around, etc. But we have executive style as well. So we also have that family dynamic. So we're very aware of the family dynamic. We always have been. And our information is not made for kids, but we have a lot of kids around. We have that. Every time I mention Luke, I have to go and I have to pull him up. Luke, where are you at? Are you in the chat? Because I just do this for Luke every time. He's been VIP a long time, and he is an excellent guy. We are thrilled to have Luke, and he has a beautiful family. A lot of you do. And yeah, Luke is quintessential VIP, guys. He's a powerhouse. When the bull market gets going, I'm going to tell you guys, when the bull market gets going, watch Luke with the charts. Don't even worry about it. Don't even ask, guys. Just watch. I'm not sure if he finds the bull flags or the bull flags find him. He's that good, okay? Either he's finding the bull flags or the bull flags find him. You'd prefer it to be that the bull flags are finding him somehow, if you could program that up. But he will make you ask the question, I promise you guys. I promise you. So as we look at the infographics, I want you all to be able to download this information. It's just critical. It's VIP know-how. Again, I'll just tell you, in terms of dispensing the information, it is much like this book, and I'll stand by this right now. And Sophie, I'm really glad you're in the audience now for Twitter, that you can go there and you can download this information. It's beautiful. Give yourself time to process it. It's not an immediate anything. As we look at this information, the Encyclopedia of Chart Patterns, this is a follow-up book to the New York Institute of Finance. New York Institute of Finance is great for laying the groundwork. This is really the big kahuna. This is like the King Kong in terms of data. It can be very overwhelming, right? A lot of times you guys will have like maybe a college book that is this thick, but it's an encyclopedia. So I don't give it to people right up front and say, well, you know, with New York Institute of Finance, I'll say, read it. Go through the pattern, start reading what he says about an ascending triangle, descending triangle. Is it generally bullish, generally bearish? Some of the and I normally say start with the patterns on New York Institute of Finance, then get into some of the indicators. Just start to read through some of the indicators. What is Relative Strength Index, RSI, overbought, oversold, right? Some of the indicators you may leave by the wayside for years. And then you may decide, okay, you may come back to it, right, and decide that it's really critical for your trading. You may look at MACD. Moving average, convergence, divergence, a moving average essentially. It's an average of the price, right? And you may look at that and decide, like right now, we're looking at an indicator that the New York Institute of Finance talks about, and on every different time frame we can look at, every different angle we can look at it, it's wrong. You know, I'm going to tell you, it's inconsistent on at least half of them. So when that happens, we want to just toss it out, but we have to stay plugged into it, because as soon as it starts to repel the traders, we almost start to focus more because it might cut something loose in terms of an advantage, right? So that a lot of the indicators are that way. You'll get frustrated with them. We don't want to really handle this. Look at this, it's inconsistent. We're always looking for that consistency. So when we look for a realignment of an indicator and for kind of a resettling of the indicator so that it can start to provide an advantage to us again. But we are fully understanding at all times that the process of balancing all of the information, whether it be chart patterns, whether it be the indicators, whether it be just general assumptions about the market or the fundamentals, or it could be the Fed, right? The Federal Reserve, are they going to be consistent or inconsistent? Will they perform as they said they would or not? Can the market rely on the chairman of the Federal Reserve? Can he rely on or can we rely on what he's saying or not? So those are the types of issues that, along with the indicators, and you guys know there are some wild cards out there, from the fundamentals to the technicals, which is why we always look for that. We look for confirmation, and that's the last thing I'll talk about tonight. Confirmation is, as we would look at any infographic, let's say a fan formation, as we were to look at a fan here. We understand the pattern doesn't work in a vacuum, right? None of these do. So as you would look at, are any of these like a guaranteed lock? No problem. I'll tell you, some of these fans have worked phenomenally well. In terms of how they're built, I cut a great video, I think yesterday or the day before. That's a nice one to watch. And then maybe look at this infographic. Just give yourselves time, please, to accustom to the different patterns, to the different processes, to the probabilities, to what is a target, how am I supposed to measure a target. All of these issues will come to light, guys. You can watch old streams, you can watch old videos, and slowly things will start to make sense. The more that you read, the more time that you spend, I know that you're gonna get there, and we're gonna make sure you get there, guys. That's the bottom line. This is London with Bitcoin Spike and VIPTrader.com. In terms of the technicals for Bitcoin, just exciting to have a few people in the audience today. In terms of Sophie, I can't wait to see you trade. Sophie's going to do 100 rounds. She's going to be the youngest participant and if word gets out to Luke, I don't know what's going to happen, because his kiddos may want to have a crack at this too, in terms of try their hand at trading very quickly as well. So that would be great to see this more of a family affair. We're very excited to have you, Sophie, in the audience tonight, and all the VIP. Chris, shout out all the way to Australia. My man Venus, big shout out. Hope you're doing well. Mordecai out in Nigeria, my man. What's up, Mordecai? Always a pleasure and blessing to have you around, Mordecai. Same with you, Chris, and same with you, Venus. We have the right group. I'm going to tell you, because sometimes we'll look at the numbers even, and guys, I've learned this with the trade group. It is about exposure, but guys, it's about the group. I'm going to tell you, we can have a room, and I've had the room full of hundreds of people over a series of weeks or months in the back DM. I will take a good plugged in group of people, solid style individuals who can go through technicals, who appreciate the market, who really want to develop into a trader. And we'll have another room on VIPTrader.com for the masses. We'll do that, but we're going to have a proper place for us to continue to grow the way that I know you guys are committed to growing. That's the most exciting thing about our group, guys. This is London with Bitcoin Spike. Hope you guys are doing well. Happy happy belated Thanksgiving. If we didn't get to do it during Thanksgiving, we're excited about the holiday weekend, or the holiday weekend, and let's say the upcoming, whatever your religion is. We're excited about that, guys. Just some time to plug into family and VIP. Don't stress out about any specific move is the last thing I'll tell you. If you think you're about to miss the key market move, give it a couple days. Watch it. If you think you just missed the last takeoff for Bitcoin and you can never buy a low position again, ever, you'll never get, let's say, down low on the 4 hourly again on the RSI. It'll never hit it again. Or the hourly RSI will never reach oversold again. Guys, give it a couple days. Give it a week. Watch. We run into this all the time. This fear of missed opportunities. Fear of missed opportunities, FOMO. This is the no FOMO zone. No fear of missed opportunities, guys. This is London. We're excited about this pattern framework, the pennants in play, and yes, download the infographics and download the specific probability sheets so you guys have